Hi traders from all over the world and Horizon community. Well, today I would like to introduce you to volume spread analysis and its development throughout times. Well, even though it was developed between the end of 19th century and the beginning of the 20th, this strategy, in my opinion, still represents a cornerstone of price action theory, making it very useful when analyzing charts and especially candlestick while talking about Forex. Well, I'm gonna guide you quickly throughout the agenda of today. Well, we're gonna start with the history of volume spread analysis. I'm gonna start calling it VSA and its father, Mr. Wyckoff, and we're gonna see who is him and how actually influential he is for the world of trading still nowadays. Its approach, which we will see, is full-on universal. And of course, the market cycle built up by Mr. Wyckoff, which will give us an idea on how actually this strategy works throughout different marketplace. Well, I would like to kick off with the history of Mr. Richard Emil Wyckoff, and I can tell that he is the father of the VSA and one of the most influential traders of all the time, starting off by 15 years of age at the beginning of 20th century and developing very interesting theory which still have an impact in the trading world nowadays. Well, in fact, because of his influence throughout the trading industry, his curriculum course is still available at Golden Gate University, and he mostly highlighted the importance of price differences, which is price spreads, in relation to the volume and the closing price, which we're gonna see further away within the presentation. Well, I just want to give you a little bit more insight about the VSA, and this can be used throughout all the markets and with different time frames. So the trader just needs a volume histogram in his price chart when we're talking more about stock futures and option. However, while we talk about Forex, in the stock market or in the future market, actual transactions volume are available. In Forex, however, because it is not a centralized market, volume numbers are very hard to understand and mostly not available. A Forex trader must simply analyze the volume, observing each fix of the candlestick. And I will show you a little bit the most important feature of the volume spread analysis. Well, VSA looks for differences between supplies and demand that are primarily created by major Forex players, market makers. Well, market makers are the banks, major investment banks, institutions such as pensions, hedge funds, and big market players such as even individual traders with a lot of liquidity at their disposals. So what we want to understand by using this analysis is the volume, which is given by the candlestick, and I will show you how, the spread, yet again with an analysis of the candlestick, and the closing price. So understanding like the trend of what the candlestick are suggesting you within the chart. Well, I would like to show you a little bit of the candlestick anatomy, and we were talking about market makers such as big investment banks, and those give an important signal throughout candlestick and their volumes. Well, this is the spread, so the spread is the total candlestick between the high and the low, including the body. However, when we talk about the VSA analysis, it is important to understand how the prices closes, and it's very, very important, especially within the upwards movement, which is based on the cycle, which we're gonna see throughout the presentation very, very soon. Well, upthrust bar, as the word says, is bars that close one one that closes above the heights of the previous one. And this will give us an understanding of what is going to happen next, whether a pullback or whether a trend still going ahead, either bullish or bearish. However, in order to better understand the position of VSA analysis, I want to show you in more details the cycle of Mr. Wyckoff. Well, there is an accumulation at first, there is a markup, there is a distribution, and there is as well a markdown. Well, how is this work? I'm going to show you throughout a graph. Well, there is an accumulation, again a markup, a distribution, and a markdown within the end. Well, the accumulation is where professional buy at the wholesale price. So once there is like all this institution making huge buying, the result is a markup. Therefore, market, because of such a liquidity in the buying side, is gonna have a bullish momentum. Then, when they start to triggering away their position on buying, there is a distribution. Therefore, like very professional, such as again institution and big investment banks, understand that the price on the supplies and demand is not anymore what the markets require, start abandoning their buying position and start getting position on the sell side, and that what it makes the markdown. Well, if you'd like as well to have more deep insight on what it is VSA analysis and how you can take advantage and having an edge on your trade, please do not hesitate to visit all our official website, YouTube channel, and our social for more deeper insight in regards Mr. Wyckoff development of VSA. I believe this would be very much of your value in order to better increase the chances of being a consistent and efficient trader throughout time. Well, for today, it's all for Ludovico and Horizon video series about trading strategies. I wish you all a very happy day trading and keep up following us on our channels. Ciao, ciao.